But despite the potential sector overhang, our next guest says we're in a pharma stock picker's market. Let's bring in Len Yaffe, Managing Director at Kessef Capital Management. Len, great to see you. You list some stocks that you say are compelling, even despite the tariff overhang. Pfizer is one of them, and you could have made that case for a long time. So I'm just wondering how you view what value is right now.
Sure. And there are two known unknowns, and those are the tariffs and whether or not we'll go to major pricing changes as it relates to favored nations with the EU. And I've grouped the large cap pharmaceutical stocks into three areas. I look at the companies that are dividend plays, which maybe don't have great pipelines or have patent expiry exposure. We're about to go through a very significant patent expiration cycle, $200 billion over the next 5 years. Those three companies are Merck, Pfizer, and Bristol. Pfizer's a dividend play. It's boring. I don't think the pipeline's that great, but it's a 7.5% yield. I then look at the companies trading between 13 and 15 times earnings. Those would be AbbVie, Roche, AstraZeneca, Novartis, Novo. And some of those companies have good growth drivers, as well as they have very impressive drugs in their pipeline. I think those stocks could be considered. And then lastly, there's King Lilly, which I think is the best positioned pharmaceutical company that there is for many years, trades at a multiple 34 times, but probably growing at 28%. And I think the estimates will have to be raised by Wall Street. So the two unknowns are difficult. They're partly factored into the stock prices. We don't know to what extent. I'm very confused by the commentary as it relates to tariffs in terms of what the end game actually is. But within that, I see a very exciting, what I've called a research renaissance for the drug industry. We're in several therapeutic categories. We're making incredible advances that will cure or make chronic several cancers, tremendous advances that we talked about with GLP-1s, as well as advances in immunology and a very overlooked area, kidney disease. There are several very exciting drugs. So I think the overriding fundamentals are great. The two unknowns do make it much more difficult.
The research renaissance that you're talking about, is this causing you to invest in smaller biotech companies as opposed to pharma? I mean, do you see that as potentially the better play here? And you would have to assume that these smaller companies will either get taken out or they're well funded, because in this environment, they're not going to be raising money, I would imagine.
No, that's the great question. And in 21, companies went public at ridiculous valuations. Just real quickly, $750 million market caps with preclinical data, and it was going to end badly. It did. Now, many of those companies that have made it through that cycle or have gone public more recently are trading near cash valuations, and yet in some cases, I think the compounds are very exciting. There's one small company, it's got a market cap of $200 million. They're going to come out with a drug that looks very promising for polycystic kidney disease. We'll have other drugs in kidney, like IgA nephropathy from companies like Vertex, a larger company. And because these companies raised money after they went public, or when they went public, they raised